expert joins in on the show right now. Kewal, hi, morning. Great to have you on ET now. This quarter, with respect to US pricing specifically, there were no major concerns flagged off by any of the companies. You think it's fair to say that the worst could be behind us, at least when it comes to US price erosion?
So, very good morning to all of you. If you see the history in the last 3 years, the price erosion has been continuously happening. And if you break the segments where it is happening, the simple generics is where the maximum price erosion is happening. Whereas the complex generics, you see there is an improvement in prices by almost about 5%. OSD also, there is a price decrease by 10%. This quarter has been quite different because of the shortages of products. And there are almost about 323 molecules which are shortages, and Dr. Reddy's and Sons and Gland are the ones who are really going to benefit because they have this product in the market. But I would not go by this quarter, because if you see the analyst reports, they all say for 2024, we would see a single-digit price erosion.
Okay, interesting. And what about the outlook for domestic sales as per you? Because the price increase did help some companies post healthy growth. What factors do you think are at play when it comes to the domestic pharma growth in particular?
So domestic farmers, I think, are having a good time with growth around about 9 to 10%. And I've seen different companies playing different strategies. For example, the Indian companies are getting ready to do distribution, to do sales, to do marketing of MNC companies. And you have seen how, Sanofi overnight sold off its portfolio, or disposed of its portfolio of cardio to Emcure, of vaccine to Reddy's, and CNS to Cipla. So also we've seen how Novartis did the similar things with the Reddy's, Ciplas, and JB Chemicals. So this is a new trend. I think we should recognize that more of the MNCs will be doing. Then there is this AstraZeneca, which is going to dispose of its plant. Therefore, there is an opportunity for contract manufacturing of those products. But more interesting is the new products of MNCs. There are very recent tie-up of Mankind, with AstraZeneca, and there is a tie-up of Glenmark with Pfizer. I think this is very interesting. Therefore, this is a great opportunity for Indian companies. But for all the others, these are good opportunities for big companies. But for others, there is this sales and marketing opportunities. When I say sales and marketing opportunities, is to look at omni-channel, look at digital, grow the market much faster than others, and penetrate as deep as possible. I think this offers a great opportunity. And to those who do R&Ds and development, biosimilars offer a great opportunity. Today, the biosimilars are growing in US, growing in India, and the prices of biosimilars in US are about 15 to 30% lower than the proprietary products. So I would say these are really three big areas or the spaces where the Indian companies have a great opportunities.
Great. And a lot of, names as well you give us there. But when it comes to the pricing pressure, because, that sort of did persist for CDMO players at least. But the cool off in the raw material prices now has helped companies post decent growth in numbers as well. And we're seeing that play out as well. But there is the China growth rebound as well coming in. Is this really a segment to look out for, you think?
So the prices have really been coming down in terms of raw materials, and particularly in APIs. There's a lot of stability there. The China, I've also now trying to align themselves to the global market requirements, and they are also, very keen to see that their factories start producing at the scale they were doing prior to COVID. But that doesn't mean that the prices are going to go up. The prices are going to stabilize. You take all the products which are being imported are at lower price. For 2024, there is not much of a pressure on the margins, and Indian companies are going to show good margins, both domestically as well as in global. If the first quarter is pretty good, and if the shortage continues for another 2 quarters, I think we have a great bonanza for the Indian companies.
Majority companies, Kewal, are now guiding for EBITDA margin increase in FY25 versus what they saw in the, in the last year. What do you think could be the key driving factors behind margin expansion?
One is the raw material. API's prices have come down. The raw material production have come down. Second is the scale they are getting. Therefore, the cost of production is coming out. And the companies, post-COVID have really looked at cost as a major factor and have done a lot of initiatives to reduce cost. So all these factors do contribute to the reduction in the cost and the increase in margins. And on the distribution side, a lot of people have done a lot of different ways of distribution and cut off a little bit of layers in distribution to add on to their EBITDA.
Mr. Handa, pharma also follows what could be called as a typical cycle. Which are the 2 or 3 subsector of pharma where you think things are exciting in terms of 2 to 3 year time frame? Oops. Just lost him there.